Hi folks, good morning. This is the weekend commentary for the dollar and foreign currency. We're going to be looking at what I'm anticipating on the dollar in the new week and how to position ourselves for what the market is going to present to us in the next week. Before we start analyzing the charts, the first thing you should do as a trader every single week is you need to know what is happening on the economic calendar of events on forexfactory.com. So you go to the Forex Factory and you're trying to find out the possible high or medium impact news events that can unfold in the course of the week, which have the tendency to either stimulate a speedy price delivery or as well as slow down price delivery, depending on what we have on the economic calendar. So you are paying attention to the dates that the events are unfolding, the time the event is unfolding, the type of impact, whether medium or impact, and news event. When you see the yellow boxes, it technically signifies there's going to be low impact expected. When you see orange boxes, you should know that there's going to be medium impact expected, and when you see the red boxes, it signifies high impact is expected on the asset class. So you're also paying attention to the asset class that the impact has been expected on. So when you see the red boxes, it's telling you here that it's high impact expected on the dollar around 1:30 p.m. on Monday, 17th of March 2025. So technically you can see on Monday we may have price action create either the low of the week on the dollar or the high of the week on the dollar, depending on what directional bias tells us. But usually the weekly market profile tells us that we anticipate to see price from either the high or the low of the week between Monday, Tuesday, or Wednesday, and price action will deliver to the directional bias between that Tuesday to Thursday, and we anticipate the midweek reversal and the close of the week between the Thursday New York session and going into Friday. This is what we anticipate in price action. Again, price action will most likely form that high or low of the week during this news event, this high impact or medium impact news event. Most likely that's the time price action would usually want to create a run on liquidity and form either the low of the week if we're in the buy week or the high of the week if we're in the sell week. So you just go through the entire economic calendar, taking note of news events you shouldn't be trading: CPI, FOMC, NFP. NFP is usually first Friday of every month. CPI, we had CPI just yesterday. Was it yesterday or the day before? Okay, that last week Wednesday. Okay, we have CPI. And so you pay attention to these news events so that you avoid being in the market, especially during such an impact, or when such an impact is expected. You should stay on the sidelines, at least a day to the news event. Then you go to the dollar index, because the dollar index is the benchmark asset for all the dollar associated currency, and you're trying to find what is the directional order flow, what is the current order flow on the dollar, where is the next high probable draw liquidity that the dollar is going to trade into. That's going to be more important to you, knowing the next most probable draw liquidity that the asset class you are trading should trade into, and you pay attention to it. So you start from the higher time frame, the monthly time frame, because that's where institutions would usually trade and put up their liquidity orders at those levels. So on the monthly, we've been emphasizing the dollar is currently in a bearish order flow. We see the dollar mitigated at the mitigation block right above there. The dollar traded into that premium mitigation block and created that sell displacement, consolidated for a while. And what I see currently is a most likely a power of three concept. Price action accumulated, swept the high, traded into that bearish order block right above here, and we now start to see the dollar create lower lows. If you technically look at the candles on the monthly time frame, You can see that the dollar is resisting the highs and clearly sweeping the lows. The next candle took out the low, never traded anywhere close to the high. So it tells us that we are currently in a bearish order flow, and we've been anticipating price to trade into the buy side imbalance, sell side inefficiency, rebalance, all the one-sided price delivery here. Price has just given a tap into that fair value. Again, we are considering the relative equal lows here as strong liquidity, the old low there, and the fair value gap right below that is also a probable strong liquidity. In the long run, we look to see the dollar trade into even the bullish mitigation block right below. So but currently we are focusing on the bearish trend. And on the weekly time frame, what do we see? We see the dollar took out an external range low right there. The sell side liquidity pool residing below the low of that candle, price action traded below it, and going by the laws of price delivery, for every expansion that takes out external range liquidity, we anticipate to see a repricing into internal range, because price technically moves from internal range to external and external to internal. So clearly we took out the liquidity there. We'd like to see price retrace into the internal range liquidity level, the breaker block right there, the bearish breaker. We also have the bearish order block, but we'd like to see price mitigate all of that buyer's remorse and create new swings to sell to the downside. On the daily time frame, you're focusing on market structure, and clearly you see we've been in a bearish market structure. Price has been creating lower low, lower high into the bearish mitigation block right there, created that expansion lower, and we took out the relative equal lows here by the left. That's a sell side liquidity pool. Price action has traded into it. Okay, and during the week we see price trade into a support turn resistance area, the fair value gap right by the left there. The price violated. We see price traded into it, and it's looking like price action is finding resistance at that area. Okay, but the coming week is going to give us more details as to what to anticipate around this level. Just two things I will be anticipating. If I see a shift of structure around this level, especially after Monday, price action opens and takes out the high, I like to see price trade above the old highs there on Monday and create a 1 hour shift of market structure bearish. If I see that, then I know we're going to continue selling to the drawn liquidity right below and mitigate all the others right at these highs. Again, if I see price action open and trades below the previous week's low right here, that Tuesday low, and create a 1 hour shift of market structure here, I'm going to be a buyer into the internal range, liquidity. That's what I'll be anticipating. So you technically just look at the 1 hour, and at the moment you're hands off. You don't have anything you need to do at the moment until the week opens, and when the market opens, we're going to see more detail about what price action will most likely do. See the relative equal highs there and the old highs there. If on Monday price opens and takes out the highs and creates shift of market structure bearish, more like do this and create a shift of structure, you're going to be a seller into the next round liquidity. If price opens again and trades below previous week's low, create shift of structure between Monday and Tuesday, you're going to be a buyer into the internal range on the daily time frame. Okay, so that will be my anticipation on the dollar index. And let's briefly take a look at the Euro USD chart and see if we have something to anticipate as well. So while we're anticipating the dollar to create these things, we'll be looking at the Euro USD chart. Let's take a look at the weekly time frame as well. You can see the weekly time frame of the Euro USD chart is as well very bullish. We see that price action also traded above that buy side liquidity pool residing right above that high. We also have one sell side imbalance, buy side inefficiency. The fair value gap there is also serving as to draw liquidity, and what we can anticipate to see is to see price open in the new week and do one of the two things: either just trade into that drawn liquidity before we see anything. I'm also seeing this as equal highs. So this is also drawn liquidity for me. The equal high there, the weekly time frame, it's also serving as a drawn liquidity. So I would like to see price action do, a repricing into internal range before the expansion. While we're anticipating the dollar also to reprice into internal range, we're anticipating the Euro USD to do the same. So in the new week, if we see price action opens and takes out the low of the previous week's price action, that low there, Thursday low. Okay, price opened on, let's see, Monday. Okay, Monday, Tuesday, Wednesday, Thursday. Yeah, so price trade below that Thursday intra-week's low and possibly find support at the bullish order block here or the bearish order block here and serve as resistance turn support. So price takes out the low and trades into that level and gives us a 1 hour confirmatory signature. We can buy into the drawn liquidity higher. Alternatively, we will see price action takes out the high here and create shift of structure. We're going to be selling into internal range for repricing, and we are looking at these levels, the old high there, price action. We want to mitigate that, then we expand. Gold has been bullish all the way, has been bullish, and I mean, you guys must have enjoyed this price prediction on gold. We started to call gold bullish right from this level. Look at the thousands of pips in price delivery that gold has delivered. Okay, so gold also in the new week, gold is bullish as far as we're concerned. We like to see gold open, reprice into internal range. We have resistance turn support area right there. We like to see price mitigate into the internal range, then give us confirmatory signature to buy more into the next external range. That's what I'll be looking at on gold. I'm paying attention to internal range liquidity areas like fair value right here with an old high in between. That is an IOFED. That's institutional order flow. Entry drill, you're wondering what that is, just go through the videos on my handle and you're gonna have more clarity on how to trade IOFED. So in the coming week, two things can happen. We may see gold open and take out the Friday high right there, take out the high, just something like this. Gold, take out the high, create shift of structure or displacement to the downside, then we sell into internal range. That's what I'll be looking at on gold, and when it gets here, we'll look for confirmation, we buy gold again. Alright, my friends, so please, if you enjoyed this analysis, don't forget to click the subscription button, turn up your notification bell so you stay updated every time I post a video. And I have good news for you guys. Those of you who've been asking me what's your recommended broker to trade with, I'd like you to just check the link on the description of this video. You're going to see a link for broker. I recommend all of you, my followers, to sign up with the broker, fund your account, and you'll get access to our free Signal Telegram community. Just check the link on the description of the video as well for our Telegram community. Make sure you join the Telegram community. A lot of values are being dropped in the Telegram community, educational content, and also signals. We are working on doing consistent signals in the Telegram community. Again, I'd like to give a shout out to Currencies Trading Institute. This is my official trading floor YouTube handle. I'd like to recommend all of you to give them a follow. These guys are doing amazing stuff, amazing value. They're doing a lot of amazing value on the trading floor. This is we giving you a trading floor, trading experience, trading from a professional structure. That's what we're doing here. So give us a follow on the Currencies Trading Institute YouTube handle. If you're looking to join me on one-on-one mentorship, just check the link on the description of the video and you're going to see the link for one-on-one mentorship. Send a DM. My personal assistant is going to get you enrolled. Until next time, I wish you good luck, good trading, stay safe.